वो चालू आपको बोलेंगे क्या? अरे वाह संस्मित, पानी का कुछ अरेंजमेंट होगा क्या? Namaste. Hello and good evening, and welcome to the first conclave on gold and silver by Motilal Oswal AMC. On behalf of Motilal Oswal AMC and the MOFSL group, I welcome all our investors and our partners to this conclave. This is the first of its conclave which we are doing at MOAMC or MOFSL group level, where this two metals have been covered as a part of an offering also, and also as a part of our today's discussion. So gold is a substance like no other. It's beautiful, desirable, rare, but at the same time, it's valuable. Its appeal is almost universal across cultures, across time, and from the very earliest time, gold has played a very crucial role in human life. Okay, it has actually formed the bedrock of our wealth, and gold drove the engines of world's economy for centuries. The story of gold is a history of an obsession. While we know silver for utensils, but also ornamental uses have been discovered in the ancient times of Egypt, China, Persia, Greece, and more other countries. While highly valued as a decorative status symbol, but also that it's actually double as a store of value. Silver's greatest legacy may be its long history as a money throughout the ages. If you go back to the Rome's silver denarius, which began to see the use of the Roman Republic around 211 BC, which stood as the Roman currency for almost 4 centuries. If I fast forward in today's time, through the history, United States was also seen as an empire using silver as its currency. In fact, US minted coins between 1794 to 1964, which contains between 89 to 90% of the silver. For this, US also used to hold a vast strategic silver stockpile in their custody. They also introduced silver-backed paper contracts in way back in 1776. That is called the Continental Dollar. Was one of the first attempt by US to get into a paper currency. Around 1400 AD, when Spanish explorers, when they were trying to explore world and different continents, when they reached the first continent, which was actually a South America, and what they realized, what the people, were had a different language, the different attire, the lifestyle was different, the food was different, but the love for the precious metal like gold and silver was as common as we found in Europe and other countries. Right. So gold has not only the gold and silver has not only played a role in some of the continents, but various dynasties, which includes your Roman dynasty, your ancient Egypt dynasty, Indus Valley dynasty, the Chinese and Aztec civilization. In today's time, also these both metals play a very very important role. If you go back to see how the barter system started, as a currency, we saw the various barter system methods were failing because of their nature, whether it is cattle, whether it is sand, whether it is grains which is being used, or for that matter the today's paper currency also we have seen during war times, they also get sanctions. That's where we see these metals have survived not only few hundred years but thousands and thousands of years. Okay, in fact, if you go back to some of the currency which is being used, we have seen almost 8 to 9 different currencies, global currencies, from Portugal to Spain to Netherlands, France, Britain, and last 100 years we have seen the US has been using dollar as their currency, but we have seen gold has been there for thousands of years. Okay, so these both the metals have played a substantial role in our life as well as our currency and to run the countries as well. Now, if I can tell you a small story, how it has the store of value. Let's take an example. This is, we are talking about thousands of years. In fact, it has been said that the 1 ounce of gold, if you have today, And 1 ounce of gold, if you had say 1,000 years ago, you can buy the same quantity, same value, okay, 1,000 years ago and today also. So that tells the inflation hedging capacity of the gold. Okay, we also seen silver has been also used as a currency by various dynasties. But let's take an example of recent time. If you just see when let's go back 20-22 years, and if you are just stuck on a particular island and you try to seek help, and but somehow for some reason, there are a lot of movies have been made on these. Some of the few guys get stuck on the island, and suppose for 20-22 years, so you got stuck in 2000, and somehow you could rescued in after 22 years later, which is in today's time. And those time, if you had say 5,000 rupees of cash, okay, any currency, and 5,000 worth gold, okay, after 22 years, when you are rescued, you'll be surprised that the value of your currency has gone down to 1,200 rupees, but the value of gold which you had of 5,000 rupees is approximately 53,000 rupees. Okay, so both these metals, have a very strong power of store value, which, if you just hold it for just like that for 100 years, it catches up the price of the inflation and the current price. So that is why you've seen a lot of wealthy people are storing the gold, along with other asset classes. In fact, they are also converting their most of the assets in this gold, because it has a lot of benefits of holding this in that currency. Okay, it's portable, and if you carry 1 kg of gold, it's like almost 53 lakhs rupees, which we can talk about today, right? So this is what gold has been and silver has been playing a role in our life. Whether it is birth of a child, whether it is a marriage, or whether it is a birthday celebration, it has been given as a gift. But it is not given as a gift, but it is also given as a sign of wisdom and wealth and prosperity. So these metals have a emotional connect with us, where we believe that, whenever we deal with these currency or these metals, we also deal with, like Lakshmi and Kuber. So some of the auspicious days, people believe to buy these metals to not only create wealth, but also to prosper. Okay, so to talk about this more, we have some expert here. So today's discussion, whatever I spoke about today, we are going to discuss this in deep dive more from some of the experts, which actually have been tracking these metals, whether it is gold or silver, for a long period of time, not only at the domestic India level, but at the global level. So they can also give us overview of, what is happening in these currency. Now, this is about history, which we talk about, but how they are relevant today, why they should be part of your wealth. If we just compare, look at the returns, you may not be that happy, because, people want to invest in high growing asset class, but this is an asset class which has almost negative correlation with equity as an asset class. Okay, that makes it as another asset class which should be part of your asset, because it's been looked at as a safe haven, especially when times are not good across the world. And especially last, we have seen during pandemic and during this war situation also, we have seen these metals have been gaining popularity. Now, this is and if you also look at silver, the major uses of silver is also in the industrial commodity. Okay, but what is happening in industrial commodity? What kind of uses it is being done by industries, in which segment, and what is the supply? How it is driving economies, how it is affecting industrial production, and what is going to be the future industrial consumption, and how these metals having holding in our portfolio will play a role. To talk about today, we have two eminent speakers which will cover us, which will give us more light on it. So let me introduce our first speaker, Mr. Kishore Narne. Kishore Narne is an associate director of Motilal Oswal commodity and currency business. He brings with him the rich experience of more than 12 years in the field of commodities and forex, and has been instrumental for growing the group's commodity and currency business. Kishore will share his views on the dynamics of the gold and silver globally in India, and why it should be part of your portfolio, and why and which proportion, whether it makes sense to have a 50-50 or 70-30, or only one commodity. Okay, all those things will be answered today by Kishore Narne. for the investors portfolio. So I invite Kishore Narne to take over the next session to give more light on both these metals. So over to you, Kishore.
Thank you, Vikash. So I'll right away get into the presentation part. So I think, see, gold is in India predominantly an emotional asset rather than a financial asset. But so it's
flow.
can you hear me? Hello. Hello.
Yeah, Kishore, we can hear you.
Yeah,
you're audible.
Yeah, so predominantly gold has been a emotional asset actually, though it's a financial investment for many of the people for a very long time who doesn't have access to formal banking system and all. So it's been a storage of value for quite long time in India, which got associated emotionally to and also religious as well as. Silver again is traditionally seen as store of value, but at the same time, silver jewelry, silver utensils have been a predominant driver for both of these.
Okay.
When we look at both of these metals,
mail me also. I am
in Indian perspective, I think I'm getting some disturbance. Can yeah. So looking at the financial from the financial perspective itself, both the metals have their own advantages and disadvantages. As we put them in the same basket as precious metals basket, which also contains platinum, palladium, gold, and silver. Though platinum, palladium goes further into the industrial use than into the precious side of the basket. So if you put it into that setup, so gold being the most precious and non, in the sense, a store of value, to platinum being the least the precious side, and even the palladium being the least precious side, which goes into more further into the industrial side. As far as returns are concerned, actually, if you look at the last few years, it has been what you call a roller coaster journey for all the asset classes last 2 years. So we put a chart like with all the indices, basically Nifty, S&P, and Japanese Nikkei, along with the gold prices. So you can see that the initial portion of where the pandemic hit us, the gold performed, the dark black line has been gold. So gold performed much better than equities as an asset class. Then predominantly from Jan 21 onwards, it started to underperform the equity as an asset class, even the developed markets as well as emerging market equities. Now, I think most of the 22 from the beginning of Jan 22, most of all the, including gold and silver and the equities, have become marginally corrected and also actually become a sideways and chaotic in nature. But you understand when equities perform or the gold basically being a hedge against inflation or as a value, a store of value, it doesn't really put up that much. But at the same time, when there is a bad broader economic period or a recessions or high inflationary scenarios, typically gold and silver perform better than the equity as an asset class. So I think the right side chart actually shows how the global inflation trends have been. Again, it's no surprise there. Europe has seen a significant rise in inflation, driven by both supply side issues as well as the conflict and energy related issues. So we all know that there are no surprises there. So inflation is rising. Absolutely, there's no debate over there. So further looking at expectations, how the future expectations of inflation in US is there, even that's trending much higher. At the same time, we also see global growth concerns coming up. Uh, the debate right now is only either we are already into the recession or recession is coming, whether it will be a prolonged recession or whether it will be a short-lived recession. So these are the debates, but there is no debate that we are not going to hit a recession. So there will be a lag on the growth front, and definitely the higher interest rates will impact the growth, and undoubtedly recession is coming. So in that sense, when we look at the asset classes per se, the asset classes which will come which will add value to your portfolio during those high inflationary scenarios, especially when the growth is falling, is going to be the precious metal complex, especially the gold. But you might say that yes, inflation is already showing up on the charts, but gold has been going down, and uh, so why is it happening? So typically, gold, for any rally or a significant rally in gold, it needs two major ingredients. The number one is uh, liquidity, or the lot of money, the money supply, and the second one is the cost of money. That's so lower interest rates, higher inflation, which is driven by liquidity, actually makes a perfect recipe for a gold rally, because you should have too much money without too much of cost of having it. So because gold being a non-yielding asset, whenever the cheap money and too much of money is there, basically gold rises significantly. But I think off late, 21 onwards, or 2021 onwards, actually, gold has been facing a significant competition from crypto as an alternate asset to gold, in order to protect against inflation. It has become primary asset which will give you protection against inflation, and a lot of people started believing it. But we all seen that early 22 onwards, where the crisis hit the cryptos, I think it lost that value altogether, because the volatility doesn't justify the nature of crypto as an alternate for gold. So that actually has gone off. So now there are only two safe havens in the world. That's one is the US dollar, the other is gold. So both are actually typically currencies. One is regulated and controlled by US, and second is priced in dollars. So I think they are the two only things. But today, at this point of time, if we are looking at last couple of months, especially, US dollar emerged as the only safe haven rather than gold itself, because there and gold started falling. So though we have a major geopolitical crisis going on, we have a major inflation issue, and we have threat of recession on our hands. Uh, so despite all these things, gold didn't perform, because number one, the biggest enemy of gold is rising interest rates. So as far as the interest rates are rising, the gold will start to feel that heat and the headwinds from the interest rates. Second is, because the gold is priced in dollar terms, as the dollar is rising against most of the other currencies, partly with the strength of US economy, but largely due to the weakness in other currencies. Actually, it could be euro, off late GBP, and some of the emerging market currencies. So it's not only the strength of dollar, it's also the weakness of other currencies, making dollar much stronger than what it should be, or what its economy portrays it. But at the same time, so the higher dollar means any asset which is priced in dollars will go down. It's a simple mathematical calculation. The higher the value of dollar, you pay less amount of dollars for the same asset value. So gold predominantly is not falling, but because it is showing mathematically lower value, because the dollar has been appreciating, and to some extent, when we are sitting in India, when we are pricing our gold in rupee terms, the dollar appreciation is also means rupee depreciation. We are cushioned by that rupee depreciation in India, to some extent, but not largely. So we have also seen the price drop in India, but not to the extent what we have seen in the international markets. So how is it going to be? I think we have seen interest rates rising much faster than what many people have anticipated, and at the same time, the rate hikes have been much larger in nature, which actually tells us that uh, the rate hike cycle, the entire rate cycle, will not be prolonged like 2-3 years. It might be very short run, probably another 6 months or 6 months or 9 months, where we could expect rates to peak out. At that point of time, where the recession will be evident, and the economy slows down, the purchasing power erodes at that point of time, where we can see that pain coming up at the consumer end. That is where actually we could see that the rates peaking out, and dollar peaking out, and probably at the same time gold should be bottoming out. So in our view, somewhere in the next 6 to 8 months, this turnaround will happen. As far as silver is concerned, again, when we look at silver, especially even last, we can say that 15-20 years also, it actually has a bouts of sideways to marginally corrections, and then you will have a significant upside. Then it has a consolidation, it has an upside, and now correctly we are in the corrective downturn. So what happens to silver from this point of time? So I can actually divide these periods into two different things. So one is pre what you can say, the green fuels, and post the emission norms tightening across the globe, and environmental sensitivity came in. So I think silver actually is playing a predominant role there, either in photovoltaic cells like solar panels, or in majority of the tech related and even EV related technologies. Silver plays a significant role, including IoT, the Internet of Things. There's a lot of in nanoparticles, silver is getting used. So silver's industrial consumption has been on the rise. That's typically the chart which we are showing here. You can see that the speed or incremental growth of silver as an industrial commodity, and the demand has started increasing from 2020 onwards. That's where actually the dynamics or the fundamentals of silver changed forever. It's no more a precious metal, it's more an industrial metal with the rarity or the limited amount of silver available as a metal. So unlike aluminum or unlike other non-ferrous metals, where the supply is easy to obtain, but silver is a very different in that manner. And also silver is there are extremely rare cases of silver mine being operated. Silver is never operated as a single mine, or silver mining doesn't happen. Silver is always a byproduct of many other mining or metals. So it could be part of iron ore, it could be part of copper concentrate, it could be part of nickel, lead and zinc. So all the non-ferrous or ferrous metals, especially on the non-ferrous side, when you smelt them, you get silver as part of that. You get some of the gold and you get some of the silver as well as part of that. So silver always emerges as byproduct of industrial mining. And so the control of quantity of silver, whenever you want, you can't really boost it up, or you cannot reduce it up, because being a alternate or a secondary metal, so the miners doesn't even hold silver, or if they want more silver, they can't really increase the silver, because by doing so, actually they will be impacting their primary metal. So it's very difficult, or it's very really not possible to really uh, have the price elasticity to the supply, actually, whether the price will really drive the supply, or whether the price will actually shrink the supply. Either ways, it is really not that connected to the price. So when you see the supply side, actually the demand has been increasing since 2020, where we're looking at around 1100 tons of demand, and supply should be marginally lower. In 22 forecasted, where 21 we had a marginal shortage, and 22 also will have a marginal shortage or deficit of silver supply compared to the uh, demand. But anyway, so we have actually dipped into market deficit as far as demand supply is concerned in silver since 21, and 22 is also expected to be that. So as this price pattern which I've shown in the earlier slides, it might not repeat, and probably here onwards it will act more as a fundamental based commodity which is driven by demand, and as an industrial metal rather than a precious metal. So when you constitute a portfolio which contains gold, as gold itself has seen as a hedge against inflation, hedge in your portfolio uh, against the global risk. Uh, but in that portfolio also, when you look at the overall contribution of gold, I think at times gold becomes a currency rather than an asset. And for Indians especially, gold becomes another way of holding dollars. So instead of holding rupees. So that way, what our forecast today is like, medium term, we might be having a much milder returns. But in a longer term, when you're looking at 2 years or so, probably silver is expected to perform at 28-30% upside, whereas gold is expected to give us roughly around 17% return in the next couple of years. Again, I think if you're looking at somewhere in the mid 23 or early 23, I think that's where you'll see the sharp turnaround from there, because the cycles have become much sharper. And as we peak out, if we peak out in interest rates by December itself, we will see the price turnaround much faster. So it depends, all depends on how faster the interest rate cycle peaks out. The question is, what kind of ratio it should have actually, as why the ratio of 30% gold and 70%, why should not be like. So looking at the returns, this is the last 5 years returns, including 22 estimated the current YTD returns. Is typically you've seen 19 and 20, we have seen a significant return in gold silver. Normally 25-30% year on year growth in prices is normally not seen. So you can see that if you see gold, 14 to 15% is the average rise in prices in a bull period. Overall, if you look at a 10-year or a 15-year period, gold will give you around 12% to 13% CAGR, whereas silver will give you 30-35% CAGR, depending on where you entered. But it's extremely rare to see 2 years consistently gold and silver going up by 25-30%, in excess of 25%. So 19 and 20 has seen that. Again, 20 has been driven by pandemic, and also continued liquidity infusions which has happened post pandemic also. So the significant returns happened, which is 19 and 20, has slowed down in 21. So that doesn't mean they have actually turned around or it has been bearish, but it's in a marginal correction, or have gone into that consolidation phase after a large price increase in 2 years before that. When you look at this chart, which is gold and silver price charts, you can actually see the gray line of silver. When it falls much steeper than gold, and when it rises much faster than gold. So at times in a bull trend, it performs significantly higher than gold, and in a downturn it actually performs, it also falls much larger falls it displays when the market goes into a downtrend. So that's what the tendency of silver itself, the nature of silver itself is that. So that actually makes us if when you're introducing silver into that portfolio, you should be able to control this volatility. So the ratio is something that you should have much lesser ratio of silver compared to gold, because silver adds more risk, but it also brings more returns to the table. So you can't ignore that metal. In order to control that risk and return, I think the 30-70 rule significantly helps. So this is one chart. I just put it down for the last 5 years, 2017 onwards. If you put a 100 rupee on gold and silver in different ratios, I put 3 different ratios, gold and silver. So the 30-70 is gold 30% and silver 70%. 50-50, that's equal portions of gold and silver, and 70-30, the 70% gold and 30% silver. So you can actually see how these 3 portfolios performed over the last 5 years. And you can see this gray line has been a consistent outperformer in all the 3 scenarios till now, right? So that actually makes it a best case that if you are actually holding a 70-30 gold silver, that actually is a better way of incorporating this into your portfolio at this ratio, rather than actually having equal amount of gold silver or more silver. So at times in a bullish periods, the blue line rises much faster, but it also comes with that volatility and risk. When it falls the fastest. So to avoid that volatility into your portfolio, 70-30 acts as a best possible ratio of having these 2 assets in your portfolio. So that's it from my side actually, and Chirag will add more insights onto this. I think Vikash is on mute, I think.
You. So the first question, why do you think that all these wealthy people or rich people globally, they are investing their wealth and holding their wealth in gold and silver? Any thought on this?
See, again, as I said, because gold and silver has a unique properties actually, which they bring to the table. One is whenever you lose confidence on fiat currencies, either it could be dollar or any of the currencies which the people are holding, they actually tend to turn to the real money. So gold is called the real money. So the ultimate currency, where it, as you said, gold actually doesn't change its value a lot. So it changes its price, but not value. So it's a statement I want to explain, because, for example, as you said, that if you go back 100 years back also, the gold value and today's gold value is same, because it would be able to purchase whatever the with 100 grams of gold, whatever you could have been purchased 100 years back, today also you'll be able to purchase the similar goods and services or whatever you want to do, but the price is completely different for what 100 years back and today. The change is what it is measured in. what it is measured in, it's measured in dollars, it's measured in rupees, it's measured in euros or whatever. The measure keeps on changing. The measure's value keeps on changing. So the moment you measure 100 meters with a 1 meter scale, you'll get 100, and you cut the scale into half and now measure the same distance, you'll get 200, right? So that the distance didn't change. Actually, the measure shrunk. So the measure itself is the dollar. So as the currency's value shrinks, the value of gold, the price of gold in those currencies increases. So that actually protects anyone's purchasing power. And the rich and mighty always know that threat is always there in any currency. So whenever they see there is a indiscipline in fiscal indiscipline in any of the countries, and monetary indiscipline, and too low rates and too high inflation, they tend to migrate their wealth into gold or even silver for that matter.
Yeah, I agree. I think JP Morgan says that gold is the real money and everything else is credit. I think that answers. Right. Great. I know we talk about gold all the time. Okay, but silver is also a precious metal. Okay, so some light on precious. Of course, you covered few things. But in industrial landscape, where do you see silver is being uses, and any outlook on that, or is there any new industries which are coming which are also going to use this metal?
See, as we are progressing into an era where there is a huge emphasis on green fuels, a huge emphasis on environmental sensitivity, the investors are recognizing that they are rewarding those companies which are sensitive to those issues. So the solar is going to be a phenomenal consumption area of silver. There's a lot of battery technology where silver is becoming a critical component. All these chipsets and typical low-end processing power, low-end small transistors, or we can say the circuit boards, the PCBs, especially in the white goods, especially not the high end. So when you're going to high end like mobiles, mobile phones and laptops, etc., gold becomes the preferred metal. But when you come to a lower end tech like washing machines and so on, so white goods, where they are becoming smarter, and where they are also going to be having chips in them, those silver is the preferred metal to draw those circuits on those boards. So these are the two, tech and the green energy is going to be a big driver for gold, silver in the coming days.
Yeah, great. Thanks. Now, the ratio which you also recommend, and the product which you're also going to discuss, is also a 70-30 ratio. Okay, but if my view is very positive on silver, which I think that silver will do, is of course my personal. Any investor may be thinking that because of all these new technologies, including your medical equipments, all the green technologies, silver may be having higher demand. So how does that 70-30 play as a role? Does it help me in returns? Does it help me in volatility? Some light on that.
Yeah, to be very frank, even our house view is also that we are very bullish on silver, actually. And we think that it will significantly outperform gold in the next couple of years. But when I see an ETF investor is not a tactical investor. ETF investors are normally a long-term investors who are looking at a much longer term. So they might be looking at 5 years, 7 years down the line, at least beyond next couple of years. So when they look at their portfolios in such a manner, we also need to see how the volatility impacts an investor. Because when you say that we are bullish on silver and tomorrow go and buy silver, and suddenly it falls by another 10%, the investor's confidence shakes out and he gets out of the market. After that, it might rally, whatever. It doesn't mean because he's not participating anymore. So to control that volatility in the portfolio and keep them invested, I think the ratio works beautifully. You also participate in silver and you also participate in gold. At the same time, both are tech related. Demand is coming up. Whatever the demand currently we have is financial demand, which has shrunk. The tech demand has not shrunk in either of the metals and actually is increasing. Only in this higher interest rate scenario, the financial demand goes down as an investment demand goes down. So that investment demand is very, very fast in turning around and coming back. The moment the scenario changes, all the money will turn around. So I suggest rather than holding gold itself, which will give you much stable returns than this ratio, but at an overall portfolio level, it will be having a lower return. But if you go 100% silver, you add a significant volatility to your portfolio. So I think a better risk-adjusted ratio is 70-30. Incidentally, we also have a similar index on MCX, which is called Bulldex, which is in a similar ratio. And that also reflects that this is a better ratio. Even when I showed the chart over a period of 5 years also, it shows you a better performance.
Yeah, great. I think that takes me to the next question. You just said that during this high inflationary period, we say interest rates going up. Okay, during this time, how do you see both these metals doing? We also saw gold also correcting. So, any thought on that?
Yeah, gold has corrected significantly in international markets, but in domestic side, we are still not that down. Actually, I think 10-12% we are down from the top. But fortunately, what helped us in domestic markets is, number one, the rupee depreciated from 72 to 82 in the last couple of years. Not even couple of years, 18 months to be very precise. And also, Indian government has hiked its import duty on gold to 15%, 15.5%, which actually 5% push, at least 4.5% push came from there. So that's an additional benefit which is caused to Indian investors. So we got a significant cushion there. Do we expect a duty to come down anytime soon? No. Second is that the currency depreciation should be halted here. I don't think so. So we will see rupee depreciating further from here, and there's been government is still seeing it that though we know that there's a lot of smuggled gold which is coming into India due to the import duty arbitrage. But still, government is not in a mood to decrease or take a view on the duty at this point of time. So I think our returns will be slightly protected here, despite interest rates rising. And I might expect the prices to be stable and slightly, even moderately lower also in the next coming 6 months. But again, I see that in this kind of investment funds, probably if you prefer, if you want to time it out, it will be extremely difficult to time. We are down almost like 15% from the top. So you are getting at a much bargain rate. Probably if you are still doubtful, probably you can subscribe for an SIP kind of a or periodic investment in this in the fund of funds, so that you can actually regularly keep funding that, and in the next 6 months you will be able to average it out. So that could be a better way of looking at it.
Yep. Yeah. So still, you feel that in this inflationary period, both these metals will do well.
Certainly, absolutely, they will do well. So the only thing is, as I said, the timing. So the moment the bulls or the turnaround in the price will happen once the turnaround in the interest rate cycle happens.
Okay, great. That takes me to the next question, which you just mentioned. We Indians hold gold, kind of a quasi dollar. Yeah. Okay. So some light on that, the correlation on dollar and these metals, and where do you see, so if dollar continues to have a rally from here, what's your view?
See, our internal view on dollar index is around 124, 125. So it could be a radical number. Chirag might be surprised looking at that number, but so we are right now around 111, 112. So 125 is like still a long way to go, which takes our rupee conservatively close to around 90 plus. So rupee depreciation is going to continue. The moment because see, we have been trying to contain the rupee under 80 for a long time. We have almost spent $100 billion on interventions, etc. But we have realized that it's not possible. We're trying to now. RBI is coming with few schemes to save it from here also. But my idea is, I think we will not be able to do much there. So we will import some inflation into India. Right now, we are not struggling with inflation. We will import some inflation. We have off late, the crude prices have cooled down a little bit. But still, the Ukraine conflict is still very much on. Global supply side issues have not sorted out. And the demand is still very strong. Excluding in a few commodities like energy, where we are seeing some softening in demand. And China has actually softened demand over, especially last couple of months due to the COVID-related shutdowns and COVID-related lockdowns. So they are coming back actually. But in the next a month or 45 days or a couple of months, I see China to bounce back on the demand front. So that actually will cause another commodity price spike. So that way inflation is very much here, and it will further tighten, further rise from here. So as a protection against inflation, I would definitely suggest whatever your investment portfolios is, see, gold as a part of investment portfolio depends how much gold or precious metals you should have. It ranges from 10 to 15% depending on what age bracket you are at and how much risk you are going to take. But this ratio can go up to 30-35% when you have high inflation, and when you are threatened by the currency depreciation. It can go down to 5% also when you have an extremely positive equity market environment. So, but you cannot have zero, you cannot have 100%. So I would suggest at this point of time, my personal suggestion will be you should be having anywhere between 15 to 20%. I'm not saying 30, I'm not saying 5. So a 15% portfolio allocation should be there, because that's where we are there. We are seeing some positivity and some positive returns still in equities and risky assets. But at the same time, your cushion should be slightly higher in precious metals. At this, you can't build cushion once the price turns around. You have to build cushion when the prices are falling. That's what the point is.
Yeah, that helps. Now since you already clarified about the percentage in the portfolio, if I can ask, of course you already covered in your presentation, but for few viewers might have joined late. What's your view on both these metals for 1 year and say 5 year? What kind of returns do you expect?
I think 5 year we are looking at 30-35% return in gold, around 60-65% in silver. But 1 year we might see negative 5 to 7% in gold, and 10-11% downside in silver. Given if the rupee doesn't depreciate, if the rupee depreciates, the fall will not be that much, because I am feeling probably 84-85 RBI will try to defend it from here onwards. But if we are breaking those levels, so 87, if 87, 88 is on the cards, then probably we might see 5% decline, not much more than that.
Yeah. Thank you so much, Kishore. I think this clarifies the percentage of portfolio for in this precious metal as well as the returns which you can see. So long term definitely it looks good. Already it's been corrected. It's a good time to invest. That's what Kishore is talking about. So thank you so much, Kishore, for coming in here and giving your insights. It was definitely wonderful. It's a good discussion having with you. Thank you so much, Kishore.
Thank you.
Yeah, so that takes us to the next session where we have another eminent speaker who's basically, he is actually an analyst who's been tracking both these metals, including currency for long time, Chirag Sheth. So Chirag is a principal consultant for South Asia at Metal Focus Limited, a team of analysts and consultants that possess a deep understanding of the market. Chirag has 13 years of experience in precious metal trading and research, and has worked for UBS and Latin Manharlal Commodities. His analysis is for South Asia market, focusing on India, Sri Lanka, and Bangladesh. So I welcome Chirag in today's session. Post Chirag, we will be also joined by Pratik Oswal, who heads a passive business for Motilal Oswal AMC, to take the Q&A session with Chirag. So over to you, Chirag. Am I audible?
Yes, Vikash, thank you very much. Let me very quickly share my slides with you. So are you able to see the slides? Is that visible?
Yeah, it's visible. You can make it full screen.
Right, yes, absolutely.
Yeah, great.
Right, thank you, Vikash, and thank you to Motilal Oswal for providing us with the opportunity. As you rightly mentioned, and actually I was going to say, what JP Morgan said many years ago about gold, that gold is credit, gold is money, rest everything is credit. But gold is a phenomenal asset, be it precious metals. And to me, in my 17-year career, one thing that I've learned about both gold and silver is that it is a chameleon. It changes its color as change at time. Gold is a currency, it's an commodity, it's an insurance. It depends upon the way you look at both these precious metals, and it's a fascinating one to look at. Now, what has been happening in the gold market? We'll start with gold and then move on to silver. But what has been happening in the broader precious metals market, you have to actually look at it, is that gold, dollar has acted as a perfect headwind for gold prices, and resulting into what has happened to the silver, because silver acts both as an industrial metal and also as a precious metal, right? So silver takes its cues from copper as well as from gold. What is interesting is that we've seen over the last, probably 5 to 6 months time, a massive flight of capital into dollar since the time that the Fed has, started with unwinding of its position. We've seen, Fed tapering its balance sheet, Fed going into interest rate hikes. And, as the time has passed, as inflations remain elevated, Fed has become far more aggressive. And resulting of that, a lot of other central banks which were actually running behind the curve have also become, far more aggressive. So we've seen hikes coming in from, as many as, 90 central banks of the world. That is the kind of synchronized, policy change that we've seen. And I think probably this is a testament to the way inflation has been over the last year or so in the global economy. As you are aware, Fed has sounded, further hawkish than what it was, earlier. In fact, at the recent meeting, they came out and said that they could, continue to raise interest rate, and the interest rate could remain high till the time, Fed feels it comfortable. Now, what has this done is that suddenly the interest rate expectation in the US, has suddenly increased to 4.5% for 2022. And that is very, very significant, given the fact that, Fed is going to maintain extremely hawkish stance onto, the monetary policy, which is likely to put pressure on both gold and silver and other precious metals in the near term. However, as something Kishore pointed out, I think most of the investors should be looking at, the way both these precious metals are likely to behave in future, rather than worrying about what is happening in the short term. What's very interesting is that we basically believe that while the Fed tightening cycle could continue into this year and probably into early next year, however, the Fed could take a pause in the second half of 2023, and then eventually some sort of rate cut would start coming in mid 2024 into 2025. However, so which essentially means that gold could actually start doing better than what it is doing through second half of 2023. And as all of us have learned over the years, that it's very difficult to time the market. One way to benefit from the eventual price rise increase that is going to come into gold in maybe next 2 years is to start doing your SIPs, or start slowly buying into gold and silver on a gradual basis. Now, why is it that the interest rate has been increasing aggressively globally? And that is to do with the inflation. The inflation has been running red hot. While last year a better part of inflation was essentially driven by increase in freight cost, increase in supply tightness. However, this year's inflation is more to do with the high energy energy cost, especially post the Ukraine-Russia crisis. And now with basically energy prices coming down, we believe that we could see a bit of cooling down of inflation in next 4 to 5 months time. However, it does not mean that inflation will come down significantly. You may essentially see inflation cool down from the existing levels from where we are. Now, Kishore mentioned about optimal holdings of gold, and this is a kind of study which was done by World Gold Council for various countries. And I think what's very, very interesting is that for any investor in India, an optimal holding of gold into their portfolio would be anywhere between 8% to maybe around 17%. That's an optimal holding in gold. And I think it's very, very important to understand that compared to some of the other countries, why is it that India has got a higher gold holdings? One thing which is there is that this is on a comparable risk-adjusted return. So, for example, the kind of volatility that gold prices have vis-a-vis volatility that other asset classes have. So, we've always seen that volatility in other asset classes in India is far more than volatility that we've seen in gold. Also, the fact that gold in India also benefits from a continuous rupee depreciation. We've seen on year after year, rupee tend to depreciate anywhere between 2 to 3%. So, gold in India benefits from increase in gold prices in dollar terms, but also rupee depreciation. And thus, various studies have now shown that probably anywhere between 5 to 15, 8 to 15, 17% is what your gold you should have in your portfolio. Now, looking at some of the returns that gold has generated, in fact, if you look at among all the commodities over a 20-year period, gold has generated on an average 10% return, and silver has generated roughly about 8% return. So gold and silver are among the top 3 return generators among the commodities asset class, and that clearly shows the importance of having both gold and silver in your portfolio. Also, gold does well during the times of inflation. So we've seen that whenever in India, especially when inflation increases by 7%, we have seen gold doing well. And now, as you are aware that we are into a phase of high inflation, gold prices in rupee terms would do well, because this would mean that there is a depreciation of the currency. So the Indian investors would actually benefit from the depreciation of the currency, as gold is denominated in dollar terms, and essentially we import gold. So as the currency depreciates, the imports become expensive, and thus the resulting factor is that gold prices in India tends to go up. Moving on to silver, the optimal weight for silver is roughly 6%. A medium risk investor should ideally have 6% silver in their portfolio, and I think that's where the Motilal Oswal fund does very well, where there is an allocation to both gold and silver. So as an investor, one would benefit from the price rise, but also the alpha that silver tends to generate because of the increase in volatility that silver has. So both gold and silver are a fantastic way to invest into precious metals. Now for silver, something which is very interesting is that silver, most of the silver essentially production comes from lead, zinc, copper mines. So as some of these mines tend to reach the end of its stage, what we believe is that the growth in silver production that we've seen in 2022, 2023 will kind of start plateauing, and that's when we'll see that the supply of silver, the growth in supply starts kind of flattening. However, demand for both gold and silver is likely to be very, very high. Jewelry demand, we believe, is likely to see extremely robust. driven by growth in economy, driven by rising incomes, but also the fact that now purities, after the hallmarking has come in, there has been essentially increase in purities, which is also driving kind of demand higher. In terms of silver, the global demand, essentially large part of the global demand for silver comes from industrial usage, and some of the big industrial usages are your electronics, your electricals, and as we become more and more high tech, as our homes become connected, as we use more electronics, our cars become more connected, the usage of silver is likely to increase. For example, we recently did a study on the amount of silver goes into each car, and what we found out was fascinating, that on an average, in the each high-end car that is available globally, about 16 to 18 grams of silver is used. So as even our I would say the 1200 cc, 1500 cc's cars become more high tech, the usage of silver in these cars would eventually increase, and that would mean that silver demand continues to see a consistent upward trajectory. Also, if you look at silver, investment demand has been very, very robust. In fact, India has seen significant increase in investment demand in silver, especially driven by price, given the fact that prices have fallen considerably over the last year or so. And that means that India has now one of the largest importers of silver in the world. We've seen a significant amount of increase in physical investment demand in India, in United States, and other parts of the world as well. Now, I was talking about industrial demand, and this you can see that there is a consistent increase in industrial demand for silver. In fact, we believe that globally, industrial demand for silver will touch record levels, and this is likely to be driven by essentially automation. This is likely to be driven by usage of more and more electronic equipments, and that is obviously likely to drive demand for silver globally. And the forefront of this usage is essentially your solar, photovoltaic, as we call it. So, as you are aware, the world is increasingly moving towards green energy, and solar is at the forefront of it. And, one of the biggest usage of silver is solar. So the solar panels are essentially made out of silver paste, where there is about 90% of silver in it. And I think what is essentially happening is that as more and more countries become conscious about carbon emissions, usage of solar energy is increasing, and that's why we expect that continuous growth in installation of solar. So yeah, so that's kind of a brief overview of what's happening in the global gold and silver market. Very quickly, I want to say that yes, maybe in the short term, we may see a bit of further price correction. However, over the long term, there are fundamental factors which are getting developed, which would benefit investors of gold and silver, and one should essentially look at a more staggered and a systematic investment into both these precious metals. Yeah, thank you very much once again.
Thanks, Chirag, for your insights. Again, thanks for being here. So now we can start the Q&A round for you. So I just have a list of questions, and then we can go ahead with the rest of today. So the first question that comes to you is basically, why is there a low allocation to silver, especially when silver is expected to outperform? Any answers to that?
No, so I think what we've seen, Pratik, in India is that essentially the silver investors have been traditionally buying, silver in forms of bars and coins, essentially. I think the probably the awareness of silver financial products and the availability of silver financial products has been very, very limited. So if you actually look at, our estimate is that over the last, 8 to 10 years, about 19,000 tons of silver was essentially bought in the forms of bars and coins, because of lack of awareness about the products that were available, for silver. And I think that's essentially the key why, silver, unlike gold, is pretty dominant on the physical space.
Got it. And this another question that keeps coming up. Which of these asset classes will, at least out of gold and silver, is historically or at least expected to outperform, especially in a bearish or a downward trending market? What is your opinion on that?
I think in a bearish market, gold tends to outperform silver, given the fact that silver has got much higher volatility. And I always tell people silver is like gold on steroids. So that's why you will always see that silver has a far higher beta, far higher volatility. But also it is because of this high volatility also generates a certain amount of alpha over gold on a long period of time. So essentially what happens is in a bear market period, silver gets probably hammered much more than gold. However, in a bull run, silver outperforms gold by leaps and bounds.
Got it. Thanks. So, how much does India contribute in the demand for silver across, global industries? If you had some data on that, it would be great if you see any sort of, analytics on, where the demand is coming from, or, where is silver being used from the Indian context as well as from a global context?
Sure. So if you actually look at, Indian silver demand on an average has ranged between 5 to 6,500 tons. We are among the top 4 fabricators of silver in the world. And if you have to break up on the Indian silver demand, essentially it could be, categorized into 4 segments. The largest being jewelry. We love our piles, we love our, silver necklaces and toe rings, and roughly about 2 to 2,500 tons of, silver goes into that kind of segment. Then the second biggest component is silverware, our utensils, idols, that is roughly anywhere between 1,200 to 1,500 tons market, Then we also have a very large industrial market, and a lot of people are surprised when we say that India has a very large silver industrial market. You've got silver plating, which is huge. We also use silver in our electronic equipments, into our homes. All our switches are made out of silver, right? The tips, the contacts. So India also has got a large market on silver, which is roughly about 1,000 to 1,200 tons. And then we've got a very, very vibrant investment market, largely physical investment market, either in form of the small bars or the kilo bars or the coins.
Got it. So this is a question on asset allocation. Traditionally, there is a lot of obviously people who don't consider commodities or precious metals as a part of an asset allocation. A lot of people do like the characteristics of the fact that it's very low in terms of correlation to stocks and bonds. What's your opinion as an expert in this? Would you recommend an average person who's building a stock and bond portfolio to add some small amount of precious metals, or would you say that only if maybe someone who is looking at, say, a sophisticated investor should do that? What is your opinion on how retail investor can go about building a portfolio with or without silver and gold?
No, I think commodities are an essential part of one's investment journey, and I'm not saying this because I've spent 17 years in the commodities market, but I always say this, understanding commodities also makes you a better equity investor. Some of our large companies, be it Vedanta, Reliance, Adani, are essentially commodity companies, so that helps you understand, how equity would work. But out of this, if there are 2 commodities which really stand out, it has to be gold and silver. It has shown history, it has shown consistent returns over decades, and especially gold is so agnostic to what's happening on the economic side, right? It still kind of on an average generates you 2 to 3% return, despite the fact that what is happening on the economy, what is happening, on the currency side. So I would say, one has to have gold and silver in your portfolio, and also commodity as investment. Then you could have through commodity funds, you could have through ETFs, that's a different thing. But having gold and silver is very, very important.
Got it. Thanks for that. So last question, I think this is again, one of the biggest questions we get, I think, so we're mostly equity people. So, I think for us, this is also something of a learning opportunity for us. In your opinion, if because, obviously physical gold and silver is very emotional. How would you answer that question? If someone should or should not hold physical gold and silver, vis-a-vis ETFs, vis-a-vis, I think mutual funds, how would you go about, sort of, breaking it down to, an investor, what is right for what investor?
No, I'm glad that you asked this question. And for this question, there are multiple answers to that, right? There is, I would say it depends on what is your motive, right? If you want to flaunt, then yes, invest in gold jewelry, right? Yeah. Because to me, buying gold jewelry as an investment would mean that buying Reliance at 3,000 rupees when in the market it is available at 2,300, right? So essentially what you've done as an investor, you've already increased your cost by 15 to 20%, which is essentially your making charges. So I would say if you want to flaunt, then yes, invest in gold as a jewelry. But if you are looking at returns, then there are far better ways of investing than investing in jewelry, right? If you want essentially liquidity, right, then invest into either ETFs, invest into silver funds which are available, invest into bars and coins, right? But if you don't want to store, then don't invest into bars and coins. If you have a long-term vision and you are okay to lock in your funds, right, then invest into sovereign gold bonds. So I would say each investor needs to understand what is his motive, what is his horizon, and what's his objective. Yes, if you look at on a broader scale, then ETFs funds would allow you liquidity, so that tomorrow if you want to sell, you would be able to easily sell it in the market. So I would say if you want to flaunt it, buy jewelry. If you want to have a hassle of holding it and worrying somebody's not going to steal it, then buy physical. Otherwise, the financial paper instruments are as good as physical gold.
Got it. So I just, one last question, this is my own question. So I know a lot of people who buy gold, but I don't know a lot of people who, actually end up, selling gold. Since you're obviously, been there in the industry for so long, what is your take on, is it, is selling gold the same or, almost as transparent as buying gold? What is the experience that the customer has? Because, a lot of our viewers are, looking at, investing in gold and silver for the first time. So I think it'll be good to understand because, I mean, we all know that through mutual funds or ETFs or, even sovereign gold bonds, it's quite, transparent. But what is the experience of someone who's bought physical gold and who's trying to sell it?
So I think, if you bought gold in probably jewelry form, then yes, there is always an hassle because the pricing, every jeweler would have different, some jewelers would, have a 5% gap between buying price and selling price. So obviously, when you go to sell jewelry, that's that kind of risk that we have. Whereas if you are holding a bar and a coin, which is a 24 karat 39 or 995 bars, you tend to get a transparent pricing. If when you go to sell jewelry, that's when it becomes challenging, and that's when it becomes very, very critical to look at whom you are buying your gold from and whether that jeweler would have a transparent pricing system or not.
Got it. Great. Thanks, Chirag. Thank you for coming and thank you for your insights.
Pleasure.
We look forward to having you more with us, in the future. As always, thanks from all of us at Motilal Oswal Asset Management.
Thank you.
Excellent. So thank you everyone for making it for this event. This is our so just to introduce myself for those who don't know me, my name is Pratik Oswal and I head all of Motilal Oswal Asset Management or Motilal Oswal Mutual Funds, ETFs and Index Funds business. So we at Motilal Oswal have launched a lot of funds and we've seen a lot of traction in ETFs and index funds in the last 3 years. We today have the widest range of index funds in India, approximately 28 products that we have in our bouquet. And today we have, funds across all categories. I would say the only category which was missing in our bouquet was, I would say, gold and silver or commodities. And with this NFO, we are currently live. It's the Motilal Oswal Gold and Silver ETFs FOF. It's a fund where investors get to have a mix of gold and silver in their portfolio. We believe that both are excellent asset classes for investing. And we have this NFO going on, which will end on the 7th of October. And I wish for everyone to participate on this NFO. We believe that I think commodities or precious metals are excellent asset classes for diversification of your portfolio. What we've also seen is that the true way to diversify a portfolio is not by adding more equity mutual funds, but actually to add additional asset classes. So if you're looking to diversify your equity exposure, you can look at adding international stocks or funds. You can add gold, commodities. You can add bonds, real estate. So I think a multi-asset portfolio is something which we really recommend to almost all investors. And commodities is I would say, essential part of that portfolio. We also recommend having a small percentage allocation to your overall portfolio in the form of gold and silver. I think that's quite prudent. As our experts on the platform have also said that gold and silver, especially gold, tends to do really well in bearish market conditions. So especially markets where we are today, it tends to hold up or even appreciate in sort of tough conditions. So I think, but we also obviously don't recommend investors to speculate and use gold and silver as an asset allocation decision where you have 5 to 10% of a portfolio in it for a very, very long time. So with that, we will wrap up this conference. Thank you everyone for being here, and we obviously will come up with a lot more conferences in the future. I would recommend a lot of our viewers to if there's anything that you would like to know about investing, about equity investing, or about passive funds, about what's happening with the investment industry, please do get in touch with us. And I mean, our main role as a asset manager is to education. So we are big believers of education. So we'd be more than happy to take suggestions on how we can plan future events for our investors. So thank you so much everyone, and see you on the next one. Thank you.